George, you talked a lot about, interest rates for private equity. I've got a couple questions here, kind of a question A and B. If rates had stayed at zero, do you think that private equity would be making this push? And I can't help but think here, is it a coincidence now that rates are 4 to 5% that this wholesaler sales apparatus has pivoted from private equity into another realm of privates, and that being private credit?
And Aaron, real quick before you jump in there, let's describe for people who are listening what you mean by the wholesaler apparatus, because that's some industry lingo, and I'm not sure everybody knows exactly what you're asking there.
When I say wholesalers, I'm talking about employees of fund companies. So think of them. There's wholesalers for the publicly traded asset managers, and then all of the privately held asset managers, and they've got an army of people that go out to companies like Monument trying to get access to our clients, saying we've got a vintage 2025 private equity fund that offers these benefits, and look at our track record, and you can get in for the low price of a $2,500 ticket, and here are all the terms of the investment. So when I say wholesalers, it's basically people who are pitching Monument for Monument to put our own clients into these funds.
Yeah, I get a lot of those emails too. They find your email in the regulatory documents and never stop.
Oh, it's terrible. Like I get at least a dozen a week. It's insane. These are, as you said, George, I've never signed up for any of these things. Like these companies say they're animals when it comes to finding an email and being relentless with cold calling and sending emails on a weekly basis.
That's sales, I guess. It'd be interesting if you could take the volume of emails that you receive and see if it's an indication of negative returns for the coming window. But anyway, so back to your question, which I think was your first question. Essentially, if rates were zero, would private equity be making this push? You can't really know, right? The world is such that you can't like control group and see how they compare. But it's a good question, I guess, that I can't answer, but I could say it's a good question. If rates were still zero and returns were still benefiting and that growth driver was still there, would they have pivoted to going after retail? I guess the skeptic in me says no way, they'd have kept the 20+% returns for themselves. But you can't know. I mean, in some sense, it makes sense to raise money from retail. But yeah, I guess if I'm wearing my skeptic's hat, I'll say no way, they never would have. This is only a function of interest rates, but I can't say for sure.